behind the current market rally. But nabtrade has crunched the data and found the stories may indeed be overblown. Let's check in with Gemma Dale from nabtrade now to tell us more about this. So Gemma, we shouldn't be so quick to blame Robinhood traders.
I think, look, first of all, Robinhood's a US phenomenon. It's not here. It's very different. So the Australian market's very, very different, and we work in a different regulatory regime, and also the trading platforms that are available to investors are just different. So different universe entirely in terms of how people approach the market. Can't do fractional investing in the same way you can in the US. We certainly don't have free brokerage, ASIC, and the regulators take keep a very close eye on what everybody's up to. So we had a look at our new to market entrants. So we have a heap of new investors, right? And what's been really interesting is how quickly they came to market. So the biggest number we had come to market, so the new customers that we had, were in March. April, there were a lot of new customers, but fewer than in March, and so on. So March was the really, really big rush of people to market, which is quite nice in terms of timing, right? You would rather be in March than at the end of May, for example.
Sure.
And we've looked at what they were buying because we're going, are we seeing this really, really active trading, right? We're seeing people just turning over speculative stuff hand over fist. We've seen the exact opposite.
Interesting.
So there's no churn.
We are seeing really similar behaviour to our existing investors.
Okay.
The one that I think is most telling is if you split it by age group, and we're seeing just as many baby boomers come to market as we're seeing Gen Z, right? So it's split across the generations. A whole lot of people who've been wanting to buy for a while clearly have gone, do you know what, now seems like a really good time. They're coming to market. Gen Z, what they have been buying is, it's almost funny. So they bought the big four banks and ASX 200 ETFs, and the volume of that is more than all the other things they bought put together. And they're mostly holding it, right? They're not day trading their stuff. That's not what we're seeing at all. We do have day traders. They tend to be, though, far more mature. They've been around a long time. They have trading plans and they stick to them. They're very, very efficient. They know what they're doing. They know how to make money in a volatile market, but also in a directionless market, which is quite interesting. So the guys who are coming to market that we see, so when they come to us anyway, they might go somewhere else, I think, if they're looking for something a bit more active.
Sure.
They do really traditional stuff. They're not wild. In fact, they kind of sit very neatly in with the rest of our groups, and they're probably less speculative in some areas. So the whole Robinhood phenomenon is one we're not seeing. They're not tweeting anything interesting.
Fair enough. Look, when it comes to, you mentioned volatility earlier on, one feature of this volatile period we've seen is dip buying. We saw a big sell-off yesterday, and then today we're up again. There's a dip. Our NAB clients participating in this dip buying phenomenon.
Yeah, they're mad about buying the dip. So that they're absolutely doing. And that was what we saw in March, right? It was, oh my God, the market's come off. Now is the time to get in. And we saw, as I've been saying to you guys, this massive influx of cash over many years. And the cash gets put to work when the market starts to fall. So most of our guys are very well trained to buy the dip, but they'll usually buy stuff that they've liked for a long time and they'll hang on to it. So they tend not to be buy the dip, get rid of it, buy the dip, get rid of it. They'll get in there. So yesterday was the first day we saw sort of enthusiasm for the market again after a few sideways days where they're like, it's not that much fun at the moment.
Healthcare held up yesterday better than many other sectors. Has that been popular over the last couple of weeks, or has people stopped searching for the next great vaccine?
So the next big thing in healthcare is always an interesting one. We saw a bit of it. It hasn't been anywhere near as big as the buy now, pay later or the travel sectors. They were the two that people got really excited about. They have been interested in it in the US, which is quite interesting. So a couple of companies that they were interested. So Sorrento Therapeutics is one where it's experimental. It's certainly not the guaranteed solution to all of our problems at the moment. That one is up about sort of 80%-ish this year, but it was up 15% overnight. And so a lot of our investors were quite keen on that. And Inovio was the other one that they were very enthusiastic about. That's up 1,000%. So that's had over the year. So it's actually looking fabulous as a stock. The actual solution or the product that they're working on, it's all speculative at this stage, right? It takes a long time to get a vaccine to market or a treatment to market and ensure that it is delivering what we hope it's delivering. But a lot of our investors are happy to take a little punt on some of that stuff. So when they're buying in the US, this is what they're looking for at the moment. We're seeing quite a bit of enthusiasm for it.
Gemma, among the small caps, one big story that's still underway at the moment is Freedom Foods. What's been happening now? What I'm intrigued to see we've seen a lot of dip buying and a lot of speculative buying in other companies that run into trouble recently. What's been happening with Freedom Foods?
We saw a lot of buying in Freedom Foods, with all the news that came out. So we saw a lot of buying, I don't see them holding it, right? That is the sort of thing that our guys will leap onto when it gets hammered, and then they'll be like, do you know what, that's probably not going to form a core part of my portfolio. If it bounces, I'll be out again pretty quickly. So it's interesting to see them ride the news on that and take the opportunity to buy it cheaply. It doesn't seem like it's one that's going to hang around.
Is there anything else in the small cap space which is interesting at the moment?
So the ones that have come back in, so Mesoblast has come back in. That's a really fascinating one. It's not been a great story over the last 10 years. They've come back to market many, many times raising capital. If you look at the overall trend, it's been up and down. Investors have had plenty of opportunity to take profits on some of the bounces, but it certainly hasn't been a great long-term story where everybody's a winner. And yet we have investors who will come into it when they can talk about a COVID story, then everyone's in going, maybe now's the time, maybe now Mesoblast will be my big winner. So we've seen a bit of enthusiasm for that in the last few days, which has been quite interesting. Otherwise, it's a bit quiet. Okay,
interesting. Well, it never stays quiet for long. Gemma Dale, enjoy your weekend. Thank you so much for coming and joining us in the studio here, and we'll speak next week.
Great to see you guys.
Thank you, Gemma.
Gemma Dale joining us from nabtrade there.